Good morning, Predicted Trades family. Hope everybody's doing well. Hope you all had a great weekend. This is a pre-recorded prep. It will be dropping in the morning, so I can say good morning. But I am getting this ready late Sunday night for everybody. I won't be around to do morning prep in the morning on Monday, but I will be showing up, hopefully slightly right before the bell rings. But the Beast tools have been distributed already, so make sure you go pick that up. And let's dig in to a little prep, a little review. Last week, we had a little bit of a shortened week. On Tuesday, we pulled down to trend lines from low of year. We held those trend lines Tuesday and Wednesday overnight, setting up for a great bounce on Wednesday that sent us higher. Thursday gave us a nice up and then straight back down and then straight back up kind of move, leading into a gap up and go into Friday. We got up to 4071 above the daily moving average, the daily 21, this white stair-step line. And we started to run into trend lines from recent highs that we sold off from. We are gapping up overnight on Sunday over that trend line and right up to our next key zone at 4100. As you can see, already starting to fade back from that to 4087. Wouldn't be surprised if by morning, when you guys are watching this, we've faded back to close the gap, and we might be near that daily 21 at 4056, one of our key levels. We also have the daily 50 and the daily 15 overlapping, as well as the daily 8 and that 4020 that was resistance that we sold off from. We gapped through it, we didn't retest it, and we kept going. Before we dig into what we could get this week, before we dig into where we can go, let's look at the economic calendar. We do have on Tuesday some core CPI data coming out, consumer price index, CPI, just in case you didn't realize. We also have a little bit on Fed budget Tuesday, some producer price index, PPI. Thursday, initial jobless claims, some manufacturing data, import price index. And Friday we have University of Michigan sentiment, consumer sentiment index, and 5-year inflation. This Friday is also a triple witch. Our quarterly expirations, the changeover for options, futures, yada yada. So for my futures traders out there, after this week, we will be transitioning to the December futures contracts that start with a Z, so like ESZ22. And for our options traders, the monthly contracts will be expiring this week and rolling over to the next months. So something to keep in mind. We do have our triple witch. We can lead into a week of sideways action whenever we are at a quarterly expiration. We can still get some good moves, but we could also, have a decent move, settle in a range, and stay there. So, where can we be heading? We did a great job from this sell-off holding trend line from low of year. Worked our way back up to the trend line from the sell-off. We are gapping through it, and we'll probably have to retest it during the cash session. Wouldn't be surprised if by morning we've drifted back down to some of these levels, like 4071.5 that we got to and rejected on Friday. We could even drift down to this 4056 where the daily 21 sits. We do have a number of moving averages here between 40.30 and 40.60 that could create a zone of liquidity, a magnet to get back to and kind of sit. One thing to note is on ES, POC is down near 39.29. So that puts us right back at kind of where we fought through and bounced on Wednesday of last week, setting up for the drive higher. Not to only focus on downside, but after such a nice drive and another gap up, after a gap up and go, we should be ready and expect a pullback to retest these things to potentially fill this gap. We'll cover that on SPX, marking that gap as a potential magnet if we do sell back off, because that gap will be sitting just below all of our moving averages. If we can continue to hold the daily 21 at 40.56, if we get back there, we could catch a bounce back up to retest these levels that we are at overnight. If we get through these levels, 4101, 4108, 4136 and a half, huge key level on ES. It was the low of year in January and February. That allowed us to have a little February or March rally up. But this 4136 obviously was taken out and other levels were established for low of year. So upside target, definitely this 4136 to fight back to. We do have a daily Keltner sitting up there, the first Keltner to the upside. So a couple of key levels there, providing a magnet. If we can hold the daily mean and start to push up to that first Keltner, this 4136 and a half, it's going to be a big key level, going to be hard to get through. We've dealt with it a couple of times this year. Actually, I'm sorry, we've dealt with it many times this year. The last rally up that we just sold off from, got above it. We held it earlier in the year, yada yada. So upside target, definitely that 4136 and a half first. If we can't hold that daily mean and we start to slip, we're going to test these moving averages in that 40-20 zone. We could get down to that 4,000 to complete filling the gap that we had Thursday to Friday. Below that 4,000, we do have first Keltner down, but main target is POC down at 39.30. We do have some key levels in between. So we've got our upside target, which I know it seems like we're very close to that, and I'm pointing out some further downside targets. But 41.36 is going to be very hard to get through, likely going to bring us back. I mean, past that, we do have some key zones. But overall, that's what I'm looking at for ES this week. It's a triple witch, hop X, yada yada. We can likely pull back to these moving averages and settle for a while. On NQ, same thing, had a nice rally higher. Going to mark a trend line from that rally live while we're looking at this. First wick didn't grab. Ay. Make it a pain, why don't you? There we go. So, we have a nice trend line from the lows that carried us up. We're running into trend line from highs from the last few weeks sell-offs. We also arrived at the daily mean and daily 50, daily 15 on Friday. Now we're gapping above those and on a nice downtrend to get back to them. So, overall, let's see if we can hold 12,600. The daily 50, daily 21 sit right above that, daily 15 right below. If we start to give out that 12,600, which is also that trend line on a pullback, we are likely coming down to test 12,500, where the daily 8 is catching up to. Below that 12,500, we are likely coming down to 350 to test this first Keltner down in the trend line from lows of last week. We are in a wedge that we gapped out of. So let's see if we settle back in that wedge for an OPEX week. Wouldn't be surprised for that. But if we can hold that 12,600, get going back through these gap up pre-market levels, overnight levels. First stop, 12,900, and that first Keltner to the upside once we get through 12,800. Ready. Ruddy, same thing. Had a nice trend up. Mark your trend lines from lows. We're running into trend lines from highs of the sell-off, the daily 21 and 15. We also have the daily 50 and 8. Got a lot of stacked moving averages on all of these indices going into an OPEX week. So I'm not going to, beat the point too much, but expecting we slide back and stay in those moving averages and that wedge for OPEX week. If we can hold 1880, that daily mean, looking to get up to 1900, huge key level, just like I talked about on ES with that 4136.5. On the ready, this 1900 level, very big level, provided support earlier in the year. So that's the first upside target. If we can get past that, 1920 to that first Keltner to the upside, and then 1940. Big key level. We do have the daily. Let me just double check. Sorry. Not the one I wanted. We have the daily 200 up above at that 1960. But if we give out that 1880, likely coming back to these moving averages at 1860. And if we slip through that, then these trend lines from lows of the last couple of weeks. Back into the wedge, basically, right? YM, market trend line from low of week, which now gets us above that 616 and maybe even by morning near that 800. On YM, all of our moving averages are stacked in a very tight zone between that 32,200, 32,250, let's call it, for the daily 21. So if we start to lose 250, coming back to 200, then 32,000, psych level. Below that 800 and the trend lines from lows of last week. If we can hold the gap and keep going, first stop 32,500, where the trend line from highs of this recent sell-off is currently sitting. Through that 32,750, where that first Keltner to the upside sits. Apple. Definitely not one of the stronger names last week. Basically just arrived at this zone and chopped around it. Did a great job of holding it and now moving back off of it to the upside. We arrived at the daily 8, daily 50, and the top of a 4-hour squeeze on Friday. Depending on how we look in the morning, maybe a gap up further into that squeeze. But first stop to the upside, 159.5, 160, then the daily 21 at 160.5. And, all of our stacked moving averages. The daily 200 is right there with the daily 21. If we can get through 162, then it's up to 165, where the 164, where that first Keltner sits. If we come back and start to lose 158, going to 156, If we lose 156, coming back to this zone around 154 and the bottom of this 4-hour squeeze again. AMD. Such a nice uptrend from last week. If we start to lose 85, going to 84.5, then 84, and if that gives out back to this 83, 82.5 trend line from lows of last week, if we give that out, we do have POC sitting way down below in this consolidation from last week. If we can keep going to the upside, we do have our daily 21, daily 15, right up around 88, daily 50, a little bit closer to 89, on our way to 90 psych level. Amazon. Held trend line from last week, the low from Thursday, low from Tuesday, Wednesday, and made a nice push up. We hit those 130s last week. Richie called them out on Wednesday around 45 cents. They closed around 220, 250, something like that, because they were way in the money. Amazon, if the market starts to slip back, we have the daily 21 back around, daily 21, daily 15 back around 131. Below that, 130 to the daily 8. And below that, back to the daily 50 and testing trend line from lows. But if we can keep this nice relative strength going, like we're going to hold the 21, try to push up to 135 where the first Keltner sits. BA. This is one of the only names that gives me some pause, along with Apple not looking the strongest last week. BA did a good job of fighting back up to its daily mean. But one thing I'd like to point out, we had a daily squeeze sitting back here that we got below. And then, made a nice recovery back up to our mean, but we fired the squeeze to the downside. It did open up and fire. We could reject the mean and head back down to this consolidation. Below that, we have a 2-day squeeze bottom to provide support. So we can fall back to that consolidation and have that support of a 2-day squeeze near that first Keltner to hold us up for another reversion to the mean. The only reason I say this gives me pause on the market is because it looks a little weaker. It did get back to the daily mean and rejected and settled on Friday. And it could be an easy task to slip right back to 150, kind of putting in a double bottom and retesting, or testing that daily 200. 2-day squeeze. The daily 200 is at the top of that 2-day squeeze. So we might come back for a double bottom before starting higher to get through the mean to get to that daily 200 at the top of the 2-day squeeze. We could also, if the market remains strong, hold our moving averages. We're at the daily 8, daily 50, daily 21 above. So if we can get through 160 with some strength up to our key zone, and then starting the march up through daily Keltners to get to that 200. CAT. A little bit better of a recovery last week. Got back to the mean, held above it, and pushed on that gap up. So, with a gap up again, looking for CAT to hold that 189.5 if that gives out, coming back to the mean at 187.75, and then coming back to the daily 8, daily 50 at 185. Below that, back to this consolidation. If we can get hold this 189.47, looking to get up to this 193.8. First key target on the way to get back to 200 and that daily 200 at 202. Google. Not loving Google for 2 weeks, has been stuck in a range. right? Since the split, Google's been on some nice moves, but I've been expecting a good, like, 2 or 3 week consolidation on Google, and now we've got that. So overall, I like to teach, play that range until the range breaks. We keep getting up to 110, we keep slipping back to 105. Play that range till it breaks. If we can get through 111 with some strength, looking to get back to the daily mean at 112, the daily 50 up at 113.78, which would start to be breaking out of that range. If we reject, coming back to that 105, and below that, our 2-day squeeze has opened up and started to fire. We have that third Keltner to the downside around 103 to keep an eye on if we can't hold 105. And we are getting close to earnings season again, so get ready for that. With all this settling on Google, who knows, it could be setting up a nice run into earnings. I'm not quite sure when they report. Not even sure. Yeah, okay, it's posted here. They report October 25th. We like to teach that MU, Micron, is chips maker, is kind of the beginning of tech earnings, and they report at the end of this month on the 29th, I believe. So we always keep an eye out on MU as the first of tech names and the first of chip names. Want to see how they react because it could start to set the pace. After MU, Netflix will be one of the other first names reporting. Netflix reporting 10/18. So we'll start to see on these names, where we're going to have earnings report. We also have GS on the 18th of October. So let's get ready for earnings. GS had a nice move back up last week after holding that daily 50, this purple line, and the bottom of a 4-hour squeeze. Moved up off that, back through all of our moving averages and above the daily 200, holding above on Friday. If we see a little dip on the market to fill the gap, looking for that daily 200 to hold around 338. Should that start to give out, likely coming back to 336, 335, where the daily 21, daily 8 are sitting. Below the daily 8, we're likely coming back to engulf to 3030. If we can hold the daily mean at 336 or hold the daily 200 and keep trucking, first stop 342, 343, where that first Keltner sits to the upside. JPM, also a very nice move and good relative strength, got up over the daily mean into that first Keltner. So a little stronger than GS and a lot of the other names we're looking at. If you look, we have a column that we provide in the tool belt that shows you the position on the daily Keltners, or whatever time frame you set it to. So you can see GS, one of the only names that's up near its first Keltner. Tesla, one of the other names. With GS, if we start to lose 118.5, likely coming back to 118, 117, last few bounce points, on our way back to all of these moving averages below. But if we can hold above 118, we could keep trying to get to 120 on our way to 122 in the top of a 2-day squeeze. Meta. Last week did a great job of holding that 158, that first Keltner down, got back up to the daily 8, and then gapped and went through the 821 and the daily 50, with a huge, nice, very strong move on Friday that just kept going. This is one of the first times that Meta has actually looked strong and got through recent resistance. If we pull back looking for that daily 50 to hold these highs that were resistance the last couple of weeks, if that starts to give out, likely coming back to the daily 21 at 165 and the daily 8 around 163. But if we can hold the daily 50 or even dip down to the 21 and catch a bounce back through, first stop 170 and then 172 where that first Keltner sits. Microsoft. A little bit better looking than Apple last week. Still not the best relative strength compared to some other names. But we do have a nice trend from lows of last week. That allowed us to move higher, back through 260 and almost to 265. If we have a dip, looking for that first Keltner and daily 8 to hold around 261.5, maybe 260 at the lowest, kind of the high from Thursday. If we can catch a bounce there and get back through 265, 268 first target with that daily 21, then 270 where that daily 50 sits. Beyond that, 274 with that first Keltner. But if we slip back, 260, this trend line from lows of last week and that second Keltner at 255. Netflix. Very strong last week. Had some very interesting moves. I talked about on prep. Man, excuse me for a sec. I talked about on Tuesday morning prep. If we lose 225, we could come back to 220, 215, that daily 50. That's exactly what we got in like the first 30-minute candle on Netflix, holding that daily 50 and holding up above that first Keltner. Then on Tuesday, engulfed right back up through 225 on the way to 230. Chopped around with the market on Thursday, but then gapped above 230 and kept going. Decent relative strength. If we come back looking for 232 to hold, to send us higher, back through Friday's highs, back through this recent high at 237, we'll call it, where that first Keltner sits, then through 240, 245, 247, where that second Keltner sits. But if we come back, we'll go to test 230, below that, 228, where these stacked moving averages, the daily 8, 21, and 15 sit. And if we lose that and this trend line, back to the daily 50 and first Keltner for a test. NVIDIA. Talked about on NVIDIA, kind of like Google, it's been stuck in a range for a couple of weeks. They haven't really been rotating into it unless the market is very, very strong. It had negative earnings and negative reaction. So we kind of want to let this thing settle. If we can get through the daily 8, it could set up a nice move back to 150 where that first Keltner sits, then back to 155, 157 where the daily 15, daily 21 sit. We do have MU earnings at the end of the month, so we could see chips start to kind of wake up and start a move higher into chips earnings. If we can't get through, coming back to test 140, then 135. QQQ. Great move up last week. Making it from 290 back above 300 to 305, 306, 307, where the daily 15, daily 50, daily 21 all sit stacked. When they get all stacked like that, especially earlier in the week, we know that we're going to try to fight to those. Let's see if we have a gap up, looking for all of these stacked moving averages to hold. the base of which is about 306. 306 starts to give out, likely coming back to 305, then 302 where that daily 8 sits. And that first Keltner to the downside at psych level of 300. We'd also be testing trend lines from lows. But if we can hold, get going through 307.5, we're going to get to 310 and 311.8. Past that, the first Keltner around 314.25 and our zone above. Roku, yeah, not too interested in Roku. It did make a nice move, but it also did nothing on Friday while the market was moving. So it basically was doing nothing, made one nice move, and then did nothing. I'm not loving Roku lately, so I'm going to leave it alone. Same with Shop. Stuck in a range. Moved a couple of bucks, and then made a nice move on Friday, whereas Roku did nothing. So they're just randomly rotating into these names, not loving them. Snow. A lot of relative strength in Snow. It had a gap up on earnings. We did come back to fill some of that gap, but we left some of the gap behind as well. So we do have this gap down below from earnings that is left. We've moved nicely off the daily 21, already up near first Keltner and beyond. If we can get through 190, it's all about getting to 200. We do have 195 on the way where that first Keltner sits. And even if we can get to 200 at 205, we have that third Keltner and recent highs. We also ran into other recent highs that we sold off from with the market. But going to keep an eye on this one. If market looks weak and it wants to come back, likely coming back to 180, 175, where these and 173 where these moving averages sit. Below that, 170 and this gap fill again. And if we can keep trucking, like I said, 195, 200, 205. SPX. I always like to teach. Mark your gaps. Because SPX is known for coming back to fill those gaps. 4020 was a key level that we sold off from last Friday. So if we are weak and coming back, looking to retest these moving averages at 4055, 4030, and then 4020 for this gap fill. The daily 8 has stepped into that gap fill. So filling that gap would be pretty much getting back to 4,000, that daily 8, where we could catch a bounce to get back to the mean. Below that daily 8 and 4,000, 39.80, then back to our zones here at 39.36, 39.28, which is where POC sat on ES. SPY. Did a great job holding that 388, 390 last week, starting our trip higher through that 395.8, which provided support to get through 400 and all the way up to 407. If we have a slip in the market, coming back to test 405 where the daily 21 sits, then 402 where the daily 50, then 400 where the daily 8 sits. Below that, back to 395.8. But if we can hold our moving averages and try to get through Friday's high, 407.25-ish. First stop, 410, that key zone above. First Keltner at about 412. And then 414, another huge key level, just like at 41.36.5 on ES. That comes out to about 414, this 414, this 413.9 level. So those are upside targets. Tesla. Went on an absolute tear last week. Very strong uptrend. Anytime we tested the lows, we caught a bounce. We called out the, what was it? 280s? Yeah, the 280s on Tuesday. I can't remember. They hit beast. I feel like at a buck 50, and those ended up at like 5 and 6, and then I think 8 by the end of the week. Tesla fought from that daily 50 all the way up to that daily 200 and above it. If we come back looking to test that daily 200 around 295, if that starts to give out, we're going to be testing trend line from lows of last week. Past that, coming back to this daily 8, 15, and 21, all stacked at 286, 285. If that gives out, 280, 275, where that daily 50 sits again. But if we can hold and keep pushing, looking to get through 300, and then up to 305, then 308, where that second Keltner to the upside sits. UVXY, I like to keep an eye on this one, just because we want to, it moves counter to the market, so we want to keep an eye on it. Last week, key thing was giving out 10 and getting back below. The sell-off got us above 10, and even on Friday, we pushed straight off of 10. So once we were back under 10, it was very key. We got under it, we rejected it, and kept going down, setting up a great run Thursday and Friday. We made it to that first Keltner and settled on Friday. So if the market is going to see some downside, we're likely going to see us settle off this first Keltner to the downside and push back up to our moving averages above if we get downside in the market. But if we can get continuation to the upside of the market, looking for UVXY to stay under 90.5, these recent lows, and push its way further down through $9 to get to that second Keltner at 8.6. On VIX. VIX started a nice steady downtrend after hitting that 4-hour squeeze top. Sorry, I just love marking my trend lines, right? There we go. VIX made it all the way down through 25, 24, 23 on Friday. We are approaching key levels at 22.5. So if we're going to see downside in the market, we're likely going to catch a bounce or get back above 22.5, depending on where we open. Get back to 23, 23.33, and then back to the mean at about 24. The daily 50 sitting at about 23.75. And trend line from highs of last week. So we've got some moving averages above to pull back up to retest, as well as trend lines from last week if we're going to see a little pullback on the market. If we're going to see some continuation, want to see it stay below 23.33, 23, get through 22.5, on the way to 22 to the downside, and this recent low at 21.5-ish. We also have that first Keltner right around there, 21.8. So hopefully this was helpful for everybody. I should hopefully be back in time for open, but appreciate your patience. For the new folks that joined over the weekend, you should all have access to the Beast tools. They are in threads underneath live trading. There's a diamond, gold, and silver thread right under live trading, where you pick up those tools every day. We are normally live every morning at 8 a.m. Doing prep on YouTube. And then we move into our Discord server and the live trading room. You'll want to go to PT Traders voice chat to join in with us and listen to us call out everything on the market. So thanks for tuning in. Hopefully this was helpful for everybody. Good luck today and this week. Remember, with Triple Witch, we should be keeping everything very tight, not expecting crazy 10x moves or anything. We can get them, but on an OPEX week and a Triple Witch week, we can see a lot of sideways action. We can see some up and down, but stay in a range where they want to close us for the OPEX. So hopefully this was helpful for everybody. Thanks again for tuning in, and we'll see you in the room.